Most people think banks deny them because of bad credit. In reality, banks deny them because of behavior that banks don't trust. And I'm going to show you what those behaviors are. Now, to be clear, none of them are illegal and none of them show up as alerts, but banks see them and they react to them. So I'm going to give you 5 red flags from my notes that will illustrate what these behaviors are so you can be mindful of them and avoid them to the best of your ability to have the best outcome with banks going forward. So red flag number 1, too much account movement. What does that look like? Constant balance swings. Money never rests. Looks like instability, not hustle. So movement tells us activity. Stability tells us trust. As a banker, I'm telling you, movement tells us activity. Stability tells us trust. Very important. So what's the second red flag? Opening credit without a pattern. What does that look like? Random cards, inconsistent lenders, no clear strategy. Banks don't see opportunity, they see confusion. They see confusion. You may be thinking you're getting decent limits, you're getting quality cards, whatever it is you think you're accomplishing. You're going from one bank to the next, no particular sequence, no order, no structure. And banks are looking at this on your credit profile and other systems that they're able to gauge data from, and they see confusion. They see chaos. What's number 3? High utilization, even if you pay it off in full. This one is big. This one is big because I think a lot of people take this one for granted. So pay off monthly debt is over low risk. It's not equal. It's not the same. Let me back up and say that correctly. Paid off monthly is not low risk. It does not equal low risk. It's not the same. Consistent maxing looks like dependency, even if you're paying it off in full. Discipline is good. Dependency isn't. Discipline is good. Dependency isn't. What's red flag number 4? No primary financial relationship. Another sleeper. Another sleeper. Accounts spread everywhere, which is a lot of people. No anchored institution. No loyalty signal. People with access are known. People without access are scattered. You hear me talk about on this channel quite a bit, having that $1,000 or $500 and spreading it out across 8 different banks. For what? What are you doing? And a lot of people don't even realize your banking relationships that you establish are tracked. That's what check systems is for. And now we have EWS, early warning system. Banks are talking to each other. They're collaborating on platforms, putting together technology and communicating to each other. So you're not under the radar because you're not applying for credit when you set up banking relationships. People, they can see you. You're not invisible. They can see you. What's number 5? Behavior changes right before you apply. This is another big one. Number 5, behavior changes right before you're applying. Sudden deposits, new accounts, last minute cleanups. When behavior changes suddenly, risk goes up, not down. You may be thinking you're making deposits to bolster your position erratically. You may be thinking you're opening new accounts to establish yourself or make yourself visible. You're cleaning and sprucing things up on your credit profile or in your banking relationship at the last minute. And then within a few days, a couple of weeks or so, you're trying to apply. It stands out. In a data-driven world where all of these things are visible, it stands out. You're not doing what you think you're doing. You're making yourself look risky. So, why this matters long term? Banks don't deny people once. They quietly downgrade trust. And that affects every future decision. So every poor behavior marker that you show, banks are slowly dropping you down the totem pole or increasing you on the totem pole of high risk. This is the internal score concept put in mathematical form. What basically ends up happening is you have bad represent or display bad behavior, and banks are slowly dropping you down a notch as a client they want to work with. You're looking risky, erratic, and chaotic. So what this leads to: slower approvals, worse terms, smaller limits, and missed leverage. This is the outcome from dropping your internal score with poor behavior and slowly dropping your positioning, your trust level with that bank and financial institution. Slower approvals, worse terms, smaller limits, missed leverage. This is where the wealth gap exacerbates itself. So in the next video, my promise to you is I'm going to show you what trusted behavior actually looks like and how to rebuild bank confidence the right way. That's what's coming next. I want y'all to comment down below. Let me know your thoughts on these 5 red flags. Which of them you've experienced displaying to a bank and didn't realize it was kicking you in the backside. Let me know how you avoid these 5 red flags if you're doing a great job or haven't experienced them. What are you doing right to avoid these red flags? Comment down below and let's keep the conversation going. To all my pioneers, welcome back. To my new viewers, welcome in. You know the channel's purpose is to help you master relationship banking, make those banking relationships profitable, and leverage those banking relationships to increase your net worth. We're turning using financial literacy to turn words into wealth. I want you to get in the description section down below. Time with me on Instagram and TikTok. And also, for those of you who may be new to the channel, I'm JP, the founder and architect of the channel. I'm an active banker and financial services professional with 14 plus years in the field, actively managing a client relationship book of $25 million in deposit and investment relationships between consumers and small businesses. I have a state mortgage loan originator's license, FINRA investment license, life insurance license, and small business banking certified. So you're getting this content from somebody who's actually in the field, applying these concepts and strategies to my clients and helping them build real wealth. So I appreciate every single one of you. I want you to stay focused, stay in motion. I'll see y'all soon.